Hi guys, my name is Erwin Muliawan. My student ID 1492896. Today I'm doing presentation for business accounting for business. Subject code is BAP12A, assessment number 1. Okay, so let's get it started. Question number 1. Describe the financial reporting environment in Australia. So in Australia, for all the businesses need to do the same reporting standard that applies in all Australian states and territories. Business in Australia, they are required to report to the Australian Taxation Office, which is, we call it ATO, the Australian Securities and Investment Commission, and the Australian Security Exchange. What is accounting? Accounting is the process of recording financial transactions pertaining to a business, so at the end of the year, company know how much profit they made or how much loss they have in business. What is accounting process? So accounting is divided by 9 steps. Step number 1, analysis of business transactions. Step number 2, they're making the journal entries. Step number 3, they post their ledger account. Step number 4, they prepare the trial balance. Step number 5, make adjusting entries. Step number 6, adjust the trial balance. Step number 7, prepare financial statement. Step number 8, close account. Step number 9, post closing trial balance. Okay, next one. What is the conceptual framework of accounting and what is the objective? It states the scope and objective of financial reporting, identifies financial information such as reliability and understandability and basic element of accounting reports such as asset, liabilities, equity, income, expense, and profit. It deals with principles and rules of recognition and measurement of the basic elements in financial report. Their objective is providing information to the management of an organization which is used for the purpose of planning, analysis, benchmarking, and decision making. Also providing information about the economic resources of an organization, claim to those resources, and how these resources and claim have undergone change over a period of time. The 4 main elements of financial statement. Liabilities. A liability is a present obligation of the enterprise arising from past event, the settlement of which is expected to result in an outflow from the enterprise of resourcing embodying economic benefit. Number 2, revenue. Revenue is the income that a business earns from its normal business activities. It is an inflow of asset which is result in increased owner equity. Number 3, asset. An item of property owned by a person or company regarded as having value and available to meet debts and commitment. Number 4, expense. An expense is the cost of operation that a company incurs to generate revenue. Accounting equation is considered to be foundation of the double entry accounting system on a balance sheet. It shows that a company total assets are equal or balance the sum of the liabilities and equity. Double entry principle, a concise representation of a concept that expands into the complex, expanded and multi-item display of a balance sheet. The balance sheet is based on the double entry accounting system, where the total assets of a company are equal to the total liabilities and shareholder equity. What is an account? An account is an evidence of all trade transactions relating to an existing person or asset or accountability or expenditure or profit. Rules for debiting and crediting. Debits and credit are the opposing side of an accounting journal entry. They are used to adjust the ending balance in the journal ledger account. Charts of account. Charts um, basically they are graphical of data for every transaction. So on this slide, I'm going to explain the analysis of the transaction. So what is analysis transaction? So is to ensure that the balance sheet stay in balance for every transaction. Yeah, let's go with the question from Wong Pty Limited. Transaction number 1. Issue shares for cash. On 1st of October, Wong Pty Limited issued share in exchange for 10,000 cash. So we can notice here as the asset going up and the equity is going up as well by 10,000. Transaction number 2, borrow money from a bank. On the 1st of October, Wong Pty Limited borrowed 5,000 from the ANZ Bank. So this is cash as an asset going up by 5,000 and the loan as liabilities going up by 5,000 as well. Transaction number 3, purchase of office equipment for cash. On 2nd of October, Wong Pty Limited acquires office equipment by paying 5,000 cash to Superior Equipment Sales Limited. The equipment as asset going up by 5,000 and the cash as asset is minus 5,000. Transaction number 4, receipt of cash in advance from a customer. On 2nd of October, Wong Pty Limited received a 1,200 cash advance from Airnox that I assume is a client. Which is the cash as asset going up by 1,200 and the liabilities going up by 1,200 as well. Transaction number 5, render service for cash. On the 3rd of October, Pty Limited received 10,000 in cash from Copa & Co. for advertising service performed. So they're doing service for this company Copa & Co. and they're making income. So the cash asset going up by 10,000 and meaning the revenue 10,000 up as well for the equity. Transaction number 6, payment of rent in cash. On 3rd of October, Wong Pty Limited pay its office rent for the month of October in cash for 900. So the rent expense goes to equity going up for 900 and the cash going down 900. Transaction number 7. Payment of insurance in cash. On the 4th of October, Wong Pty Limited pays $600 for a 1-year insurance policy that will expire next year on the 30th of September. So the prepaid insurance going up by 600, cash going down 600. Okay. Transaction number 8. Purchase of supplies on credit. On the 5th of October, Wong Pty Limited purchased an estimated 3-month supplies of advertising material on account from Aero Supply for 2,500. So the supplies I said going up by 2,500, and they asset going up by 2,500 as well. Number 9. Hiring of new employees. So on the 9th of October, Wong Pty Limited hired 4 new employees to begin work on the 15th of October. Each employee will receive a weekly salary of 500 for a 5 days working in a week. They get paid every 2 weeks, and going to start receiving on their first pay on the 26th of October. So for the transaction number 9, we can see the salary is up by 500. I think I did make a mistake here. So for this transaction number 5, so in this slide we're gonna discuss about ledger. What is general ledger is. So general ledger is the next step in our accounting cycle after the journal entry. General ledger is chronically listing of all the transactions in one account. So it will show how much account in the cash, how much account in the equity, how much account in loan, and so the next thing I like to discuss here, I already put in this cash here for the debit is 26 to 100. How I get this one here is like I accumulate all the debit cash that we got from the previous journal. Since I don't know how to get to slide, I mean like my journal ledger from the previous slide to put in here, or I'm just going to mention it. I'm supposed to have that one as well. So but anyway, I'm just gonna read it out. So the 26 to 100, how I get this one is like from the 1st of October, we got debit 10,000, and another on the 1st of October, which is 5,000, and the 2nd of October 1,200, and the 3rd of October is 10,000. So that's made 26 to 100 in here. For the credit, so basically again it's accumulate from cash, from all the transaction. That's how I got that number is. Again, I just gonna read it out. From the 2nd of October, 5,000. 3rd of October, 900. 4th of October is 600, and 26th of October, 4,000. That makes this 10,500. In this slide, we're gonna talk about trial balance. What is trial balance? Trial balance is a accounting report showing the closing balance of all the general ledger. It was used to like checking that the total debit with the total credit is balanced. So if not balanced, that means there is something error with your trial balance. So let's take a look on my trial balance here. The cash 15,700, the office equipment 5,000, prepaid insurance 600, the loan 5,000, equity 10,000, the account payable 2,500, revenue 11.200, rent expense 900, supply expense 2,500, salary expense 4,000. So that makes 28,700 in debit and 28,700 in credit. I guess that's all the reports from my presentation today. Yeah. I'll see you again next time then. Cheers. Bye.